Good day, everyone. You're welcome to my class. Today we'll be handling how to record returns. So, for a quick one, we are going to create a transaction and receive some item. Then we'll check the stock balance. So let's go to receive item. I'll be quick about that because we'll have to receive an item first. Though I have the items, but I want you to see how we receive them. So let me receive inventory without bill. Those ones are another section on its own. So basically for this class, I'm just going to teach us how to create a return. So I have, you can see this window now. This window is for receiving item from your supplier. So you can see I have basically two suppliers there. I have Easy Bakery, so I'm clicking on Easy Bakery. I buy bread from Easy Bakery. So once you click on this drop down, you select the supplier you want to buy, you are receiving this item from. That is the meaning. Now you go to the date, you select today's date. Today is Monday on the 7th of November. I select that. Then you leave as it is. So now you go down to item. I want to select the item I'm returning. Now this is, you are receiving item. So if you want to indicate, this credit has to be on. It's like a credit memo. So this credit has to be on. So how do you go about that? You first of all click on Be Receive. Are we there together? After clicking on Be Receive, then you click on Credits. You can see this way now we can now create a return. So let's now go back to the item. I have bread. We buy bread from Easy Bakery. So the cost is 1,500. So I want to return. So before I do that, let's check how many bread we have. So let's go to reports. Under reports, you go to inventory. Inventory simply shows you the stock balance of what you are tracking. Inventory item. So let's go to inventory valuation summary. Okay, the ones you go there, you see as of today we are having 200 bread. Is that all right? 200 bread. So I will go to this open windows. Open window will allow me to see the windows that are open on this QuickBooks. So I was at entering bill before, so I'll click on enter bill. See, I've gone to that place. Now I select, we have 200, so I want to return 20. Is that all right? Okay, I'm returning 20. Now you see the value of that 20 is 30,000 because it's 15. So on this spot, I save and close. It means I have returned 20 to the supplier. But before I do that, I want us to see how much was paid for that. So let's go back to that inventory valuation. Now you see we paid an amount of 300,000. This is the asset value. But if we are to sell it, we'll sell it at 2,000. Now I want us to see this thing very well. Under the asset, we have 300,000. It means we spent 300,000 to purchase this item initially. So now we are going to see a reduction in quantity and also a reduction in asset value, which will definitely result to a reduction in retail value. So before we go there, I want to also show us our balance, our bank balance. So for us to see that, let's go to chart of account. We'll go to chart of account. Our bank balance here is 3,050 naira. So by the end of the day, I'm going to let's take note of these things. Our bank balance is 350, as you can see here. Then go to the inventory valuation. The cost of what we purchased is 300,000. Now, what is the cost of what we want to return? We want to return 20 items. It means that 200 will reduce by 20. So we are going to be seeing 180 on the inventory valuation summary here. We're going to be seeing 180 because we are returning 20. Then similarly, the price for that 20 is 30,000. So we are going to see a reduction here by 30,000. So we are expecting to be seeing 270,000. Similarly, this value here also will change by the retail value. So It's like saying 2,000 times the 30 that left, which will eventually be 60,000. So let's take note of these things. Then the bank will also increase, because the money we spend from our chart of account here, you can see First Bank of Nigeria is having 350,000. It means 30,000 is going back to our account because we are returning an item worth of 30,000. So we are expecting to receive 30,000 back from the supplier. But as it may be, let's go directly. Let's go ahead with the transaction. So I'm saving to close now. Save and close. I don't want to create another transaction again. That's why I'm saving and close. So save and close. Now, because I enabled class, I can still save anyway. So I did not indicate anything on this class here. What is it? This class here. That's why they are bringing this up. But that's another topic for another day. So save anyway. So let's hold on. It has saved. Okay. It has saved. So now let's go back to our valuation. So inventory valuation summary. So it will ask us to refresh because there's a transaction that has affected this page. So I'm going to refresh. Now after refreshing, what did I say? I said we are going to see 180. That is minus the 20 we returned. You see this 300,000 here before. It has reduced by how many? It has reduced now by 30,000. Similarly here, we reduce it by 20. So 2,000 times 20, that is 40,000. You can see here was 400,000 before. It has reduced to 360,000. Are we okay? So that is how we record return to the supplier. That's after receiving the item. Then we saw that some were damaged, some were bad. So we therefore return those goods back. Hope we understand today's class. Thank you very much for participating. Please like my YouTube page. You can follow so that you get updated. You can subscribe so that you get updated on any new videos I'm going to be uploading thereafter on QuickBooks training. Nice to meet you. See you later. Bye.